Hello YouTube. Tonight I'm going to share with you the beauty of compounding. I just had a conversation today with someone and I was explaining this to him, and I really felt that this compounding issue is very important. If you're going to be investing, you need to understand that compounding, as Albert Einstein says, is the eighth wonder of the world, and I'm going to explain why he says this. But I know I've done a video about this, but this is just to emphasize on the importance of compounding. So if you had invested $10,000 with Warren Buffett when you were 20 years old, that 10,000 would grow to 9.2 million. Let me say that again. If you had invested 10,000 with Warren Buffett when you were 20 years old, 60 years later, this 10,000 would have grown to 9.2 million. On the other hand, if you had invested 10 years later, this 10,000 would only grow to 3.8 million. So this 10,000, it grew to 9, that's almost 3 times as much, when it was invested, and it had a 10-year advantage. So this just goes to show that time is very important. And as Warren Buffett said in his last letter to shareholders, that compounding really starts to make sense, really starts to return the benefits when there are decades involved and not just years. So once the time starts to go into 2, 3, 4 decades, then that compounding really picks up the pace. So if it was a graph, it would go something like that. That's how compounding works. So investing is not just for a few years. It's really start to see the benefits after decades. So there are 3 components actually in compounding, and before I end this video, I'll just explain the other 3 components of compounding. So compounding has got time, and we've just talked about time. Compounding has got the amount invested. So the amount that you invest, the larger the amount, the quicker that you'll be able to hit those big figures. And then the third one is the annual rate of return. So in the last example that I gave of Warren Buffett has been able to do 20% a year, and he has been quite consistent in doing this. And I know a lot of you investors out there, you are not going to be as good as Warren Buffett. We are just humans. Warren Buffett was like in his own league. But at the same time, you still have access to what are known as index funds. So index funds, I've explained this in my other videos, index funds are funds that invest in the entire stock market, and you can buy these and you can make 10%. So with 10%, if you do 772, which is the magic number of compounding, divided by 10, which is the rate of return, you get about 7 years. So it will take you 7 years to double your investments, which is not bad. I mean, there are not many investments that will give you that kind of return. When you're investing and you want to hit those really big figures, make sure that you allow that runway of time. So you have that runway, the bigger the better. The bigger the runway, the better. Number 2, the bigger the amount you're investing, the better as well, because bigger figures, the bigger numbers, the bigger the investment you're putting aside, then the sooner you reach those big numbers as well. And lastly, the rate of return. So the rate of return, the bigger that number is, the better as well. So Warren Buffett made 20%. For the rest of us humans, we are going to be expecting around 10%. So if you invest in an index fund, you will make 10%, and those returns are still quite, still quite attractive, still quite favorable. So if you like this video, make sure to comment, make sure to subscribe and like. This will help my videos to get be suggested to more people, and this will help me to also continue giving you such content. So it's been a pleasure. Until next time, goodbye.